I would like to introduce our first panel today to again talk about what corporations are doing to try and help reach some of these goals as well. Our panelists today include Scott Mather, who is the CIO of U.S. Core Strategies at PIMCO, Bola Adesola, who is the CEO and Managing Director of Standard Chartered Bank Nigeria, and Walt Macnee, who is the Vice Chairman of Mastercard, and I want to welcome all three of you here today. We can use this as a free-ranging discussion. Feel free to interrupt each other and jump in on each other's thoughts. I always think conversations go better that way. But Scott, why don't we start with you? Because one of the issues I did hear brought up at my table, I'm sure it came up at other tables too, is how do we turn the need to finance the global goals into mainstream market opportunities, things that companies will actually jump in? How is it worth it to you, and how do you make this actually happen?
Well, the good news is I mean, there's been some major changes in investor psychology. 1 second,
I think we might need these mics turned on. You want to try? Let me try this one more time. Hello? Okay, I think it's on, yeah.
And so, the great news is to see so many investors, both retail investors, Main Street, and Wall Street interested in sustainability and measuring it in their portfolios. Now, the problem and the opportunity is there hasn't been a good way to do that. Yeah. For instance, in the biggest capital markets in the world, the fixed income market, the bond market, there's over 100 trillion outstanding, trillions of issuance each year. And yet precious little information about the social impact of that money as it's being deployed. So the big opportunity that we see in what we're doing at PIMCO is encouraging companies to think about mapping revenue everywhere they can to SDGs. SDGs can be the common language that really turns sustainable investing, on in terms of commonality. It's the language that we should use to talk to one another, I think. And if we do that, we think the ultimate potential capital that could be deployed to SDG activities could be in the trillions. And if those of you who've been looking at capital market developments, you saw the growth of green bonds, and that's been pretty spectacular. Probably something on the order of 100 billion of issuance this year. We think SDG bond issuance, which we're promoting, could be a much faster growth trajectory, more all-encompassing. And so right now we're in discussions with several large participants in the capital market. I think you'll see in coming weeks and months there will be SDG bond issuance, and we're asking for partners to help us push that initiative along. We think it can really make a big difference, and the demand is there.
That's what I was going to ask. Where does the demand come from?
It comes from Wall Street mainstream investors. We see it from pension funds. We see it from
pension funds too.
Big public pension funds, all the way down to smaller corporate entities and treasurers. Mm-hmm. But there just hasn't been a good way, and there seems to be it's a chicken and egg problem. So we think the way to get at that is to encourage companies. Don't let perfection be the enemy of the good. Start reporting on tying revenues of existing businesses and certainly new businesses, and there's many great profitable opportunities that come out of sustainable finance, but start mapping some portion of revenues to the SDGs, report on that progress, and then for those people that are issuing bonds in the marketplace, think about taking some portion of your issuance, deciding to earmark that for your activities that are making progress in sustainable development goals, and report on that. I can tell you that we think the reception in the marketplace from end investors will be very welcoming, and it's the cheapest way to think about financing trillions of dollars worth of SDG activity.
Is there a risk involved? I'm thinking if I was a corporation and thinking about doing one of these issues, is there a risk involved that you don't meet some of these goals that you're setting out with it?
Well, there's always that risk, but that's where I think don't let perfection be the enemy of the good. I mean, we can't set such tight criteria and bind the financial activity that is tied with an SDG bond or a particular green bond so tightly that it basically that it narrows the opportunity set. We have to keep it much larger.
Right.
And so we think the way to do that is, green bonds, yes, when you could do it, even that's narrow compared to what you could accomplish by reporting on SDG activity and tying the capital to those activities.
Bola, why don't we talk a little bit about what you think governments, international finance, banks, and businesses, how they can work together to do things like finance areas like sustainable infrastructure, things along those lines.
Thank you very much, Becky. I think the question speaks to SDG 17, which is about partnerships. And in the players in this sector are not just government, banks and IFIs, stock exchanges, the investors, bond issuers, other financial sector players. I believe that government will play a key role here, and this touches on another SDG actually, the one on institutions, justice and peace. Because investors, clearly they invest for commercial reasons, they want returns, but increasingly, just as Scott said, they're beginning to ask questions about the quality of earnings of those companies. These companies, the investors are looking at environments that are safe, that governments focus on anti-corruption, for example, on human rights and so on. So I think creating the enabling environment is very key for government, the right laws, the right reforms, the right incentives. For international financial institutions, again, mobilizing global capital. Just as His Excellency said earlier, there's more illicit financial flows going into certainly our parts of the world than there are funds that are seeking investments that will help with infrastructure, power, health, and so on. And as for banks, at the center of everything is the role that banks play. Banks today are not just making net interest income or income from fees and so on. They're looking at the quality. Investors are asking about the quality of the earnings. So I think the collaboration and partnership between all the players, a lot of the responsibility actually lies with banks, because banks are at the center of it all. Investments will go through banks. SMEs, microfinance institutions, corporates, and so on will also need to use banks. So banks have a key role to play in this.
Walt, so do the payment processing actors like Mastercard. There are something like 2 billion unbanked people still in the globe. As many efforts we've made, all the progress we've made at trying to reach out. How do we reach those people? What can you do today with technology that maybe wasn't there before?
Right. So I think it's important for the private sector to do what it does. So don't stray from your core business, which is what we're doing. We spent a lot of time trying to create innovation for the top of the pyramid, but what we've been doing more recently is concentrating on the base of the pyramid, on those 2 billion people, and bringing innovation to them. So we are working with governments, with not-for-profits around the world, and just bringing digital capabilities to the base. We think that's it's sort of a double whammy, because you can create a tremendous stimulative effect on the economy when you do that, and that then influences supply chains. It influences the nature of commerce in the country itself.
How would that work together? I'm thinking microfinancing that a bank might take on, but then also the payment processing center. Is that a collaborative effort? Are there ways to work together on that?
Well, I think so. I'll give you an example. We have a lab, an innovation lab in Kenya, in Nairobi, and they came up with a product recently. It's called Tukuze. It helps Kenyan farmers gain direct access to end markets. So the truth is they're making an end run around some of the middle market players who were taking a lot of the margin and profitability out for the smallholder farmers. That's a device-based improvement. And so I think it's that kind of thing that has this great ripple effect.
I was just going to add that also for us, Standard Chartered has disbursed about $500 million to microfinance institutions across the world. In Asia, the disbursements are done on technology platforms. So microfinance banks can apply online, and they receive all the assessments, the checks, and so on. So I think fintech will play a key role in ensuring, one, we keep costs down, we're efficient in accessing the markets, and even borrowers as well have access to information. So, what was mentioned now about the technology platforms is very, very key.
Without these technology platforms, this wouldn't be possible, correct?
That's right, yeah. It's a platform approach, and then there are all the add-ons that you could imagine, like data. Data is a powerful thing. We talk about income inequality. We're starting to say more and more there's information inequality, data inequality, and once you create these data streams, you can share them with the people involved. We're finding that pretty powerful.
Bola, I guess the other question is, how do we get entrepreneurs access to all of these issues? What are some concrete ways that you're doing that in Nigeria?
At the end of the day, SMEs really are the engine room of growth in most economies, so small and medium-scale businesses all the way down. The challenges that they face are not necessarily access to finance, but we think organization, capacity. So one of the things that in Standard Chartered we've done is provide financial education and capacity building to the SMEs, which make them then fit to borrow. But then in a lot of our economies as well, the cost of borrowing is very high. So you find that, the ability to grow their businesses and expand is more or less dead on arrival. Now, what we've been able to do is to partner with governments and financial institutions in various ways. So risk participation by government, so providing some partial guarantees to the SMEs to be able to access finance. And once they're able to pay back, they then continue to borrow and grow their businesses. Another way is some interest drawback schemes where when you have a high interest rate environment and the SME is only able to survive on, say, single-digit interest rates, the government provides a subsidy which enables the SME to borrow. Insurance companies as well, being able to insure the loans so that in the event of any external challenges, the insurance company is able to pay up. So de-risking the SME space is an incentive to banks to lend to them. Additionally, for SMEs who are along the value chain of the large corporates or medium-sized corporates, it also helps because they have off-takers. So an SME is manufacturing a particular spare part or small component. For as long as there are contracts with a bigger firm to buy the goods manufactured, that also de-risks the ability of the SME to borrow. So there are quite a few innovative structures in place that are helping SMEs mobilize for access to finance.
It sounds to me like it's an issue where the government really has to play a major role and step up, though, to offer that sort of infrastructure around the outside of it to make sure that companies do want to come in.
Clearly, I mean, as the industry, as the SME industry, not just the SME in terms of turnover, but specific industries, whether it's manufacturing or power or water, as the industries become stronger, then government plays less and less of a role. But this is again about us building the institutions that will support what it is the financial institutions are doing.
Scott?
I was adding on to those comments, I think it is at SMEs, if you really want to think about unlocking the potential of the private sector to make dramatic progress. A lot of it's going to come from SMEs, and I certainly from the higher end of the quality spectrum, I don't think right now the situation, there's simply not enough high quality investments that large investors feel like they can deploy in this space, and part of the answer to that could be securitization. With or without insurance or government guarantees. But the beauty of securitization, if you think about a bank that's sourcing, these types of loans and investments and packaging them, is its built-in diversification. So I think there's a lot that can be done there. I was encouraged to hear there's a number of working groups working on that. But if you do that, you could really unlock very large amounts of capital much more cheaply than people thought possible.
But again, back to this idea of the government being involved, kicking things off, creating an incubator environment. You need stability from a government at that point too, correct?
May I also add that, yes, stability of government, stability of the legal and regulatory environment, but it's also for consideration to provide incentives for SMEs that are in particular sectors. So an SME that is in renewable energy, for example, or an SME that's in water, if their tax incentives and the laws and guidelines around it are clear and stable, then the likelihood of access to finance for those SMEs is higher. So incentives that drive the SDGs, I think, are important.
In addition, I mean, of course, we operate in countries at the invitation of governments, but
Sure.
Governments are very interested in digital commerce because of transparency, because they are trying to root out corruption. And there's a very natural partnership that I think is being created around digital execution. On the corruption side, and frankly, I'd add taxes too. I mean, it's you can't tax what you can't see.
Exactly.
It's,
So by keeping a ledger,
right.
you're able to track what's coming and going, and then also able to add the taxes on
which
top of it.
is another source of financing.
Can you give us an example of how you moved into a country that maybe you weren't in before with some of these partnerships?
Sure. Well, we went into South Africa at the invitation of the government to provide social assistance, welfare on a card rather than paper and cash, which was, you know, a huge efficiency for the government. So just a huge cost savings, but had the dramatic additional effect of creating security and safety for the recipients who didn't have to handle cash. It was loaded onto their card remotely. So that kind of thing.
Each of you are here today, and each of you have had conversations with your table. You've probably overheard other things. If there's one thing you'd like to get out of this today, what would that be? And Scott, if there's one thing that you're really seeking here today, why don't we start with you?
Well, from my side, it's partnership because, you know, there's so much opportunity and so much can be accomplished, and so I think partnership with other people in finance who are here, other people who are issuers in the capital markets, I think we could accomplish a lot together.
Where do you think we are now versus a year or two from now? What would you anticipate that market to be?
I think you'll see explosive growth in the next couple of years. So, you know, there's a lot to do. I know we're only a few years into it, but certainly, you know, I think organizations like ours, other colleagues, we see the potential.
Bola?
Thank you. I think for me, it's that as companies, sometimes we beat ourselves up on issues such as the SDGs. We think we're not doing enough. But if we look within our companies, I can assure you, and we went through that exercise in Standard Chartered late last year, where we looked at our business activities and we mapped them to the SDGs. And by and large, whether it's in community, on the business side, we were actually, we had SDGs embedded in what we did, but we didn't know because they were not structured. So my advice is that I urge the companies present here to look at your businesses, map them to the SDGs, and then see how you can enhance those activities and play to your strengths. Because I think it's all about impact, and everything that we do counts, whether it's paper, whether it's lights, they all count.
So you're already doing a lot of these things in your business anyway. You might as well get the most out of it. I recognize that.
Absolutely.
Great. Thank you. Walt?
I think we do beat ourselves up, you're right. We also beat each other up. And I think it's really important that the public sector and the private sector build trust. That requires talking to each other in language we can understand. But I'd say if we can build trust between those big monolithic sectors, good will come.
It does seem like when corporations and government and other stakeholders all work together, that's the most amazing projects you can see come out of it. That's why this lunch is so important today. I want to thank our panelists this afternoon for this.